Hi, my name is Champeli and my metric number is #20A1118. Today, we would like to talk about the preparation of accounts and its usefulness to the business for assignment, which is basic accounting. We are from Group 12 and we have 6 members. First is abstract. Accounting plays a vital role in running a business because it helps you track income and expenditure, ensure statutory compliance, and provide investor management and government with quantitative financial. There are 3 key financial statements. The income statement provides you with information about the profits and loss. The balances give you a clear picture on the financial position of your business on a particular date. The cash flow statement is a bridge between the income statement and balance sheet and report the cash generated and spent during a specific period of time. In general, accounting is a structured method of taking and documenting financial transactions with a company or organization.
First of all, I would like to introduce that accounting is a system for recording, summarizing, and analyzing the financial transaction of economic entity. The objective of accounting are record keeping, analyzing and ascertaining the financial result, analyzing the financial status of the affairs, and help business owner in decision making. Besides that, the importance of accounting are it keeps you organized, it can measure new strategy with hard numbers, it is necessary for getting investment or loans, and it holds you accountable. These are financial transactions which from 1st October to 31st October which record in a journal.
Next, I will be talking about a ledger account. What is a ledger account? A ledger account is also called T account. A T account is an information term for a set of financial records that uses double entry bookkeeping. The term describes the appearance of the bookkeeping entries. First, a large letter T is drawn on a page. The title of an account is then entered just above the top horizontal line, while underneath debits are listed on the left and credits are recorded on the right, separated by the vertical line of the letter T. This is the ledger account. Include capital, cash, debtors, waste, rent, equipment, creditor, drawings, salary, sales, computer, electricity, water, and accrued expenses account. The following is trial balance. What is a trial balance? A trial balance is a bookkeeping worksheet in which the balance of all ledgers. All ledgers are combined into debit and credit account columns, totals that are equal. A company prepares a trial balance periodically, usually at the end of every reporting period. The general purpose of producing a trial balance is to ensure the entries in a company's bookkeeping system are mathematically correct. A trial balance as at 31 October 2020. The debit account and credit account must be same, which is 744,600.
Statement of profit and loss is also referred to as income statement. The income statement is an indicator of company financial situation. In the statement profit and loss, we can get the net profit at the end of statement and use the net profit to complete the net statement, which is the balance sheet statement. Next, balance sheet statement. Balance sheet statement is also referred to as a statement of financial position. Furthermore, assets, liabilities, and equity These three elements are the most important elements in the balance sheet statement. We can use these three elements to complete the balance sheet statement and get the total monthly account.
The usefulness of the statement of profit and loss are: first, identify the financial performance of a business. If the statement of profit and loss are recorded, so can avoid wastage from various expenses such as raw materials and labors that may be less necessary at the time. Next, financings or loans. If a company wants to make a loan with a bank, they need financial statement to analyze financial performance of a company, whether they can afford to repay the loan or not. Besides, by recording regularly, the issue of bad debts or the risk of the company going bankrupt can be avoided. The usefulness of the balance sheet statement are: first, balance sheet determine if working capital is sufficient. The balance sheet is used to determine whether the company have enough working capital to maintain its operations. Next, the balance sheet makes understand business net worth. Net worth is defined as the true value of the entry. It shows how rich it is. Besides, the balance sheet see if the company can sustain further operations. By looking at the balance sheet, company can determine if they can sustain further operation.
Conclusion: accounting are record, summarizer, and analyzer all the transactions and activities, allow for informative and timely decision to be made, provide the result of the company's operation over a period of time, provide an insight on whether the current strategy chosen by the company is possible, allows proper accountability. Three main financial statements are: the income statement tells the tale of the company's operation over a span of time. The balance sheet explains the financial position of the company at a certain point in time. The cash flow statement shows the movement of the cash of the company. Lesson that we have learned over the course of doing the assignment. All transactions in the accounting must have a debit and credit, as without it, the trial balance will not be balanced. From the preparation of the income statement, we can know that transactions are recorded regardless of whether cash has been paid or received. From the preparation of the balance sheet, we can know that a company can only be financed by the owner equity or liability. Hence, a proper balance is needed. Thus, having too much liability would pose a danger to the business not being able to pay back.